Hello, everyone. Steve Ankerstar here, and thank you so much for listening in. And welcome to On Time, On Target. This whole series is dedicated to financial education, and as you can see, is a new company. If somebody's associating me with a different company, this endeavor has nothing to do with the other one. So, in this presentation, I'm giving you education, not telling you what to do. You can see the disclaimer there. It's quite lengthy and I don't really expect you to read it, but to summarize, I'm basically putting this information out. You can do with it what you will because I do not know the details of your personal situation. I will tell you how to do things. I will tell you how things work, but what you do is on you. And of course, it always ends with investments can and do lose money. So with that, let's get started with how to day trade, which is what I'm going to teach you in this presentation. Just some broad brush topics of how to day trade. We're not day traders and we're not trying to turn you into day traders. We're not trying to sell you on a day trading system and or sell you on a day trading room. None of that. I want to expose you to what it is, and I want to tell you why you probably shouldn't. I did this for a year after I retired from the military. I had my pension, but I was also starting a different business, a little low on cash flow. So I did things like played poker for money. That was fun for about a week, and then it became work. Like anything else, like flying fighters is fun, but it's also work if you want to get good at it. Same thing with poker, same thing with day trading. If you're doing it right, you should really be bored. It should not be exciting. It should be effective. It should be adding money to your account or to your pocket, depending on how you're doing it. So that's the information. If you want to reach out and check out ototnow.com, please do so. If you have any questions, there's my email to contact me. So let's move off to the first chart. It is difficult, but it is doable. So here are my tips for day trading. You have to realize it is a zero-sum game. Okay? If you are winning money, others have to be losing money. If you are losing money, other people are putting it in their pocket. That's very different from investing. Investing, we all can win, if you will. There will be losers along the way, but largely folks participate. It goes into a system that gets bigger over time. That's a topic for another day on how it does that. But briefly, good companies are run and continue and grow. Bad companies are killed off. There's not Blockbuster anymore or Pets.com. They got overcome by events. So that's how the market can continue higher. Day trading, very different. It's a zero-sum game. We are winning, somebody else has to be losing. That's just how it works. And realize there are professional traders out there, which if you're seeing this, you are so far away from a professional trader. I'm 1,000 miles down the ranks of traders because I just only do it a few times a year when the opportunities present itself. But I do look at it every day and I see, is there something I can trade? And if you saw right now, we're just after the COVID-19 big sell-off, there's times when nothing's going up. And if you want to make money during the day, you're going to take a day trade. You can also lose money doing that, but something for you to consider. There are pro traders. I like to say the Goldman Sachs trading desk or the JP Morgan trading desk. If they have 50 people in there and they're all pulling down $250,000 a year, they're making money, and JP Morgan's making more than that. Otherwise, they wouldn't pay for them to do it. So just realize there's a lot of people playing against you. And that's why we have a lot of volume in the market too. And that's a good thing, keeps prices close. But next bullet, there are thousands of systems. I don't care what system you use or what you think is best. I use a system that was very specific. I was in a trading room. I was taught by a professional. I took that system after I quit the trading room, after I day traded for a year, and clearly can't spell system there. My apologies for the typo. But as I was day trading, I was refining that system and actually overhauled that system. And I went to write my PhD dissertation on that system until I found out that there's no way the university would not publish it. But once a system is published, it gets mitigated right away. So when you're looking at joining rooms and things like that, just realize that if they're giving you the inside investing look at day trading, that actually takes the effectiveness of the system kind of out of it. So they're either not giving you the whole story, or like me, I'm giving you a little bit of the story. But the rest of it, as you can see in the next system, is the one I use, a risk adjusted gap trading system. It's proprietary. I'm not sharing what exactly I'm looking at. I do run a room in the morning, the daily morning brief for On Time on Target. It's all education. It's to expose you to it. I will tell you what I do. I will tell you when I think it's going to work, and I'm going to roll over and actually take it real time with my own money. But most of the time, I'm not taking it. I'm just looking at it and calling the trades out and drawing some lines on charts. So you guys can take them in a paper trade system or actual real money if you feel confident enough. But I'm not giving you the inner workings of the system, period. Because if I did, then the system would go away if enough people were on that system. So there's thousands out there. If you're going to get any good system, just like flying airplanes, you have to have 1,000 hours before you get to be what's called legitimate and know what's actually going on. Before that, you may be good or naturally skilled, but you don't have the experience level to actually really understand everything that's going on. So I say risk adjusted and gap trading. I break that down. It's risk adjusted through the use of a risk unit. I'm not talking about that here more than simply saying a risk unit is how much you want to risk in a day. It's up to you. I will make another video, 2 videos from now, and talk about the risk unit. I tend to use whatever your daily salary is. Maybe you're at 300, maybe at work you make $300 a day. I would not risk more than $300 a day, because if you day trade out of the gate in the morning and you lose your R unit, you basically are working the rest of that day for free to get back to even. So you certainly would not want to use more than whatever your daily income is. If you're retired or if you're independently wealthy or financially independent, then of course you can use whatever you want. But if you're trying to actually turn this into a system that generates income for you, you need a small risk unit while you cut your teeth, get your 1,000 hours doing it, take some trades, and then go from there. Risk adjusted means we set our stops at 1 risk unit down. So if my risk unit is $100, the most I can lose is $100. I set the upper level at 3R. So if my trade turns out to be correct, it goes a 3R distance, so 3 times the distance in the correct direction that I've put the trade on, and I assume those 3Rs. So if I make 3Rs on Monday because my trade worked, if I lose the next 3 days, Tuesday, Wednesday, and Thursday, I'm actually back to even though my batting average is 250. So if you have a batting average similar to baseball where it's in the 300s or you may touch 400s, you're going to be epic and making a lot of money. That's why I like the risk adjusted system. If you just had a 1R up, 1R down system, which there are many out there, then you have to be right. Or if you see ads on YouTube or wherever you get your information, you can say we're right 80% of the time. Well, okay, they skew their trades to where they don't lose very often. So you may like that as a personal, you may not make as much when you're right, but you'll make something. That it's attractive to a lot of people. So pick your system. I don't care. I'm throwing out a little bit of information as to what's out there. The gap up or down, that means when a stock has moved overnight. When I get up in the morning, I'm looking at things that have moved more than just a couple percent and with the volume behind it. So not 2 shares that move down 5%, but actually I'm looking for 50,000 or 100,000 shares pre-market in a stock, or you can do it with an index fund that is actually on the move with generally headlines associated to it. And it can be long or short. You don't know how to short, that's a topic for another day. Most people understand long. Short's a little more complicated because it's like looking in the mirror or driving backwards or backing up a trailer. You have to think differently to keep it all straight. In order to be good at day trading, you need to be disciplined like a monk. And I kid you not, one bad trade, one lack of discipline, one day that it's on a Friday and I think I'm going to start my weekend early and I'm going to pop a beer while I day trade at 8:30 in the morning. That's degenerate behavior. That's not disciplined like a monk. Okay. So if you're having an epic time day trading, you're probably not being disciplined. You're probably simulating a trip to Vegas, which is gambling. Know the difference. Gambling is the allocation of capital with the expectation of loss but possibility of win. Investing is the allocation of capital with the probability of winning, or the expectation of winning, but the possibility of loss. There's a big difference there. Or EV, if you understand EV math, you need to be positive EV to be investing. Otherwise, you're gambling. Trust the math or you will lose. This is a system, the one I use is a risk adjusted system with very specific rules. If you want to come up with your own system, then do it. I don't care. But if you're using this one or whatever system you think is the best out there or resonates with you, you need to stay true to the math. If you start toying with the math, you will get lost and you will lose. You will lose, I guarantee it. And you need to be okay with losing on a trade and walking away. What does that mean? If you are not an adult yet, I don't care what your age is, then you should not be day trading. If you get mad and go on tirades, you should not day trade. If you see a tragic event and you start bawling in tears, you're probably not going to be good at day trading. The less emotions you have, the better off you will be. Treat it like a math problem. The math did not work today. I'm going on about my business. In my system, we only take one trade a day. You take it in the first few minutes of the market opening, and if it goes up, great. I like that. If it goes down, I lose an R. I literally don't care. It does not affect my day. If it does, then your R is either too big, or you're holding on too tight with money you don't have, or you just blatantly are not good at day trading. Any of those could apply. Okay, I mentioned poker earlier. Think of professional poker players. Some people say poker is gambling, and then people that play it professionally say, well, it can't be gambling, right, if the same people almost always win? That's true. So therefore, there has to be a skill component in it. It's day trading is the same way. It's the advanced application of probabilities in a quick manner. In poker, it's still fairly quick because the pressure's on you. Sometimes you're on the clock, sometimes you're not. Sometimes you feel pressure. Well, guess what? When the market's in motion and stocks are flopping all over the place, it's literally just like flying a jet at 500 miles an hour. If your brain is not trained to think that way, you're going to not perform well and be overwhelmed by it all. So you have to train. That's where that 1,000 hours comes in. You have to understand what you're looking at, and you have to be able to understand at high rates of speed, and you have to be able to do simple math correctly every time. So the long run positive return, this is interesting. So look at this chart. When the market is closed, the long term, so what are we looking at? 93 to, I don't know if that's completely current up to 2020, but it's at least 2019. When you look at those numbers, that's what a 35-year period-ish. Look at the gains that happen overnight. So when does the market move? It moves overnight. That's when new information is priced in, and that's when stocks gap up or gap down based on that information. Like earnings reports are very rarely, there are some that are released during the day. So therefore, it's news from overnight. There's a strong correlation with the Asian markets and the European markets as to what happens in those markets affects the open with the US market. Some can say that's the tail and we're the dog. Some people say that's the dog, we're the tail. I won't get into that. However, it does move. Things move overnight. When the market opens, this was a CNBC source today. The negative 20% total return when the market's open. That's when the volume is, and that's when the traders play. So careful about, so when you think long-term buying, long-term buy and hold, best in breed investing, which is what you should be doing with your serious money in your retirement accounts. Yeah, you want this to ride, and these things reprice overnight, and life is good. This is day trade land. Just be careful with what you're doing in day trade land. So here we go. The zero-sum game of poker, like poker, most participants lose. You'll lose and you'll quit. That's just what people do. It's like buying your, let's go to a seminar and buy some real estate, get rich quick nonsense. And it's not nonsense. If you execute everything that they're telling you, you can actually make money. But most people, they kind of sugarcoat how easy it is. And that's why I like to say, you'll probably, like a day trade, you'll probably lose. You're probably not cut out for it. I'm not challenging you. I'm not trying to say anything other than I'm just giving you the facts. Okay. There's very few people that are very good at this, and they dedicate their profession to it, not just do it on the side because they're a little bit bored. So that's all I've got to say about that. As far as your day trading account, I recommend you do a paper trading account, which you can get through either TD Ameritrade or TradeStation, and there's many others out there you could use. Schwab does not have one. But that's where you can go into basically a pretend account, throw $100,000 in there and watch the market live and take trades and get your switchology down and see, see if you like it and see if you can train your brain to think a little faster. It's not that your brain can't think that fast. The first time you roll down the runway in an F-15, you're behind the airplane. I mean, it's just a lot happening, and it's happening very quickly. But you do it a couple times, your brain catches up and starts to think at 500 miles an hour instead of 300 miles an hour like you did in training. Same thing applies here. You have to be able to process a lot of information quickly. If you have a whole bunch of screens, which, that's kind of a key to success, then you don't have to be switching screens. You're making something simple. If you have one screen, you're day trading from a laptop or your phone in the airport. I mean, good luck. You can't get the information fast enough, right? So you'll need an account though. You can day trade in IRAs, but you have to always go long. I don't recommend that. Treat your retirement money like your retirement money and just best of breed long investing. Let the market work for you. Day trade out of a side account, put some money in it. If you want to be a pattern day trader, you're going to need $25,000 in there. The middle column tells you if you execute a trade and you have money in your account, Finner is going to come online and say, hey, you have executed one of 4 PDT trade qualifying trades. If you do this 3 more times in the next 4 or 5 days, depending on which day you get the notice, then you are going to be classified as a pattern day trader. Your margin goes from 2x, meaning you have $25,000 in your account. Normally, you can buy 50,000 shares that you're going to buy and then sell to or buy them back. Whatever you're going to get to flat by the end of the day. If you're a pattern day trader, you get 4 times. So 4 times the margin means 4 times the leverage, 4 times the amount of shares that you can buy. So it lets folks that are doing this and who want to do it, and proven they have done it at least 4 times in 5 days and not gone broke doing it. It says, okay, I see what you're trying to do. Go ahead. And the rules change. If you get a margin call, do not freak out. It's not you don't have to solve it by the end of the day. Most of the time, I mean, you could really, there's 2 types of margin calls, which we'll not go into today. But you can wire money. You can figure it out. But A, don't be stupid. B, if you are stupid, don't freak out. Don't go jump off the building. You can fix it. So Regulation T is what the Fed has that talks about if you want to go get some boring reading, you can talk about all that. And so there's some other stuff you can pause this and digest it if you want to. So last thing I will say is if you want to try this, so there's some good setups on the right. That day trading for beginners. I use 3 screens, but on the 3 screens, I have several mini screens pulled up on those screens. They're all HD screens. It's a Mac-based system, so it's lightning fast. I have fantastic internet at my house. All those things are important if you're actually going to do this. Last thing you want to do is try to kill a trade and then watch, the circle of death staring back at you while you're literally breaking a sweat and going, look how much money I'm losing. I tried to kill this like a second ago, because these things can move. Develop a log. Excel, there's really nothing like it. You can use Google Sheets if you're young enough to figure that out. It's a spirit myself. I still use Excel for things. But yeah, use a log, add it up. Am I good at this? Am I not good at this? Expect a J-curve reality, meaning you start with 25,000 play dollars. You're going to go negative first, like a J. You'll go down because you don't know what you're doing. But you should be able to get better, get back to even, and then start making money. If your J-curve looks more like a straight down plane crash, there's no curve to it, then you had your fun in your play account. You kind of suck at this. Do not continue. That sort of thing. So you're looking for a J curve on your log. You talked about stay true to the system. If you change the system every day, it's kind of like flying airplanes. There's plenty of ways to fly them, but you got to do it the same all the time so you get really good at the one system that you're using. Folks that had a system prior to going to pilot training, the Air Force kind of had to break them of that system and teach you how to fly like Air Force pilots fly. Hey, don't fight the system, just do it, right? We talked about using a paper account, so don't hop in with real money. I don't care how financially independent you are. You don't need to be torching money down the toilet while you're learning. Wait till you get good, and then if you want to go in with real money, that's fine. I literally will say that it's like a flight simulator. Just because you can kick butt in the flight simulator, it doesn't mean that when you take off in the airplane that you're not, cheating death and have to consider how not to die that day because you're actually up there flying. So there is a big difference between the Yahoo poker god and the real money people. So start with fake money, use a paper account, get good at that, and then you can step into the ring if you choose to. It's not pure, I say, due to slippage, meaning I really want to get into that, other than when you hit sell in a paper account, it will sell at whatever the price was when you hit the button. In the real world, when you hit that button, your order goes out to an exchange. It gets racked and stacked with others. If you're on Robinhood, it will get racked and stacked at the end. That's an opinion. Don't sue me, Robinhood. But they've gotten, if you Google that, they will talk about that's how they make their money. So I'm not just making that up. But it goes into a queue, and you get filled when you get filled. Now, we're talking microseconds, but if you read Flash Boys, you know that there's things faster than others out there, and you're probably not the epically fastest system or entry into this whole thing. So just realize there's going to be some slippage, which may work in your favor. Most of the time, it does not. Should you join a trading room? Hey, if you want. They're very expensive. If they're not expensive, I would say they're probably not very good. I charge $100 a month for mine. It's not a trading room. Otherwise, I would charge more. It's a financial education room. Show up, be there, fun banter, good people, and we have a daily day trading challenge. It's kind of fun. I will teach you. That I can guarantee. If you want to join a trading room that is a pure trading room that says follow my trades and you're going to make a lot of money, they will charge you anywhere from about $3,000 to around $15,000. So when you do your math, you have to recoup all that money to get back to even. And then you're making money. So what are the odds of you doing that? I'm just saying, join mine. It's for less. You can have fun. If you're good at it, hey, you can take it and run with it and make a killing without having to pay those kind of prices. And yeah, it's okay to piggyback on trades, my room or other ones. That's why they're set up. You do get real-time data, which is not what you're seeing through your platform most of the time. I pay, I don't know, 120 or something a month, 140 maybe. Don't know, don't care. It's worth it for me to have real-time data for the one time that I need it. More than recoups what I pay monthly for that information. And then the bottom line there, I can't foot stomp this enough, other than, you could be, don't go out and spend like $10,000 on your day trade station don't spend a bunch of money and then realize you're probably going to get your butt handed to you and then quit, right? But you do need a better system than this one guy down here at the bottom right. Looks like he might have been schooled a little bit. But you'll have days like that. So hey, it goes against you. No crying and day trading. So get over it, move on. But treat it like a business. Every decision, every trade, don't take it unless you think you have a positive expected value. That's just period dot. So talk too long. Sorry about that. Here's my information slide again. The next video that I'm going to put on the On Time on Target Now YouTube channel, as well as the OTOTnow.com, is going to be the daily day trading challenge. I will talk about how we set that up and the rules behind it, and what at least I have as the prize right now. I don't know if that'll stay the same or not. It may change. But at least I'll talk about the rules of that so you can take some time and watch that before you hop into the morning brief and have to try to sort it out real time. And then the one after that will be solely dedicated to the risk unit. So it's coming. Thanks for your patience and hope you enjoyed this. And we will talk to you next time. Bye.